Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that you guys can hear me. Hope everybody's having a fantastic morning so far. It's been a great trading morning already. Obviously, we had that great trade last night. We got some good trades coming this morning. I got a lot of stuff to share, so let's get into it. As always, got to go over a disclaimer. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you're to lose money. So please go through that process each and every time that you take a trade. All right, guys. So we got a big news lineup today. We had some pound CPI come out last night, came out mild. So like it didn't affect the pound in a way that was, unanticipated. Anyway, I have more thoughts on this pound CPI, but it did not affect the market that much. The big thing, elephant in the room, is the Fomc meeting and the rate statement this afternoon at 12 Mountain, 2 p.m. Eastern. So we're going to definitely stay away from dollar pairs. I'm going to hopefully be in and out of our trade today before that comes out, even though we're not trading the dollar. But nonetheless, it is something, we'll be looking for different opportunities. Okay, so let me actually, I have a scanner on these. Let me pull up my scanner. Let's see, London overview. Okay, so we've got the Euro franc coming down and the Euro pound coming down. Anything? Okay, so all of those are coming down. We'll talk about our trade last night. I just got to get into our bankers close trade. Okay, so Euro franc on hourly is getting pummeled right now. Let's see, Euro pound. This is actually coming into, hey, that's a supply zone. That's demand zone. Okay, I'm going to double check the pound franc. We might go to the euro pound today. This is actually not terrible either. I think I'm going to go euro pound. Yeah, so I'm going to buy the euro pound right here. I got to hurry. Okay, 1 second. 1 second. Yeah, so euro pound, you guys can go ahead and start executing if you want, but I'm going to go ahead and start grabbing several trades on here. This looks good to me. And we'll talk about why this looks good in just a moment. Okay, and then, oops. So technically on the 5-minute chart, you want to be looking at, is it touching the lower Bollinger Band? And yeah, it did recently just pierce that. It's almost piercing it right here. So I would say you've got the good to go in terms of the Bollinger Band. But here's what I'm most interested in. I'm interested in the fact that this is a somewhat of a demand zone right here. And then you've got help, right? You've got demand right here and one final little demand right here. Okay, so if this market wants to drop and go against us, it looks like there's going to be some help in several areas, and there's overlapping areas too, which is kind of nice right here. Below that, I don't know if we have much help below this today. And that's okay. Like I have a default stop on all my euro pound trades at I don't risk more than 40 pips on a euro pound trade, just because I've done some back testing and stuff like that. So this looks good. Again, if you double check the news, there was pound CPI. Now that I'm in the trade, I can talk a little bit about this a little more. So this, obviously their inflation is way higher than the United States. We complain a lot here in the United States about how bad things are, but it's, sometimes count your blessings, right? Sometimes it's way worse in other places. And theirs is pretty bad, but they were at 11.1% inflation rate, and then they were forecasting a dip just like we were forecasting, but it came out better than expected, which again, that's showing that some of these rate hikes are starting to work a little bit. We're seeing some improvement that way. And so because the US inflation rate, or excuse me, CPI came out yesterday, and it came out similar to this, which was also below the forecast. This was very expected. And so that's why you didn't see some massive moves on the pound that, you know, you didn't see some crazy moves. It was just normal price action for the most part. And so that's why I feel comfortable with the pound, because that news is kind of old now, and it was to the expectation. Whenever a news event happens to not the expectation, that's when you got to be thinking, oh boy, I got to be out of this trade, or I got to be a little more cautious. It's when that kind of stuff happens. Okay. You know, obviously the expectation today is that we get a rate hike of 50 basis points, right? We go from four, the Fed funds rate goes from 4 to 4.5. That will happen in the next 3 hours. Again, I'd like to be out of all my trades if I can by then. Hopefully we can get a good little bankers close trade, make 10 pips or so, you know, make some money and then get out of this. So that would be the ideal situation. There is some Kiwi news later today to be aware of, some GDP, and you've got some unemployment news with the Aussie. So a lot of news this week. It's been kind of crazy, but it's good. We'll get through it. And so far, I think we're navigating it well. So anyway, that's where we are with news. Now, I have back tested several trading days when there's an FOMC meeting. Typically, we have a good day. Like, it's not like we shouldn't trade on FOMC. Like, it definitely trade it, you know, on the non-dollar related currency pairs. And, you know, I think it's worth it. So, okay, guys, so where are we at with this trade? We're up 22.7 pips so far. It's just starting around this corner. Again, we have a massive support level that I don't think would break this afternoon or this morning or afternoon, depending on where you are. I don't believe that's going to break. If you know, end of trading day, no news on this particular pair. And we've got several order blocks in here that can lend a hand on this trade. So I think we're in a really good spot. And again, I like this one better again versus, say, the Euro franc. If you look at the Euro franc, yes, it technically has a setup, but it has basically fallen off a cliff here, right? And you can argue that there's a little bit of demand right there. There might be a little something here, but they're not as solid as the ones we have on the Euro pound. And then if you go out to a higher time frame on the Euro franc, I don't know if it looks any better, right? Like this could, I mean, you've got support here, some structure, and then where's the next area where the market would stop once it breaks that structure? Well, you know, you might have a banker's candle right there where you could get some help, but that's kind of far away. And I don't think I have the time to recover from that type of a trade today. So that's why I chose not to trade that one, although it can always work, right? Like you can make almost any of these work, but I'd rather trade the ones that I feel a lot more confident about. Here's the pound franc. This one also looks extremely bearish right now. You know, you've got, I don't trade these patterns a lot, but it is something to note. You know, you've got a head and shoulders pattern right there. And this one, so it looks bearish, but you know, you do have some demand right here. You got some demand right here as well. So if this thing dropped, you probably get a little bit of help, which is good. But once it breaks this structure level down here on the Euro pound, well, actually, if it broke that, there is some demand in here. So I think you'd probably be okay on that one, but I definitely like the Euro pound a little bit more, and that's why I'm trading it today. Now, where are we going to target? Where are we going to put our take profits on this trade? Let's do kind of a similar thing like we did yesterday. So when we're on the 5-minute chart, which is technically the time frame you want to be on, I look at all time frames to kind of get an overall perspective of what's going on. I like to do that top-down analysis to make sure that I'm doing, because what happens is you can get sucked into the market on a smaller time frame, and you're not seeing the overall picture, and it can be kind of dangerous to get sucked in too much, right? So you want to make sure where your big levels are on the higher time frame. Once you know where those big levels are, you can have a little more confidence going into, you know, a banker's close setup like this on a smaller time frame. Okay, so where do we want to take our profits? So identify structure first to help you identify a good level. So this is kind of a support level that broke. And what caused it? Well, there's two different layers that I think caused it. I think you could argue that there's a little bit of supply right there, and then there's definitely some supply right there. So between here and here would be the levels where you'd want to take your profits on this banker's close trade today. So let's go ahead and bring those take profits in, put a minimum right there, at least ask the market for it, at least that much, and then kind of scatter these out throughout this region that we've drawn out, kind of like yesterday. That was really fun. Yesterday we had that really big candlestick that just kind of took all of our take profits all at once. It was kind of remarkable, honestly. Yep, and we're just scattering these throughout this region, just peppering the market with our take profits. And throughout a solid supply demand zone right there. So yeah, if the market kind of comes up into here, we should get out of the trade and be happy with our profits for the day. And yeah, so if this market drops, where do we get some help? Where do we feel comfortable adding more trades? You've got a banker's candle right here. This is the last candle before on a down move before a major up move. So you're definitely going to find some demand right here. Okay, where's another area where you're going to find some demand from this market? I would argue that this right here was some pretty good demand. You can see it actually worked out in the past right here. The market broke structure, came back, tapped into demand, and then went up from there. So we know that this is an area that the market's responding to. So I definitely would say that's a good area to draw out. And yeah, it definitely overlaps kind of where we're at right now. So that's kind of the game plan, and just be ready because this market could come down. I would say it could come down another 10 or 13 pips before you'd get a nice move to the upside. So be ready for that. Like, I don't want, don't be too surprised if something like that happens, because I'm letting you know that it is a possibility right now. If it breaks pretty much this support down here, I don't think we have a lot of demand below that. So I would probably, honestly, I think I would stop out of my trade if it broke that. Well, I know, I guess there's a little bit down here. Yeah, I might work with it just a little bit. I mean, that would be kind of crazy if it busted through all of this to get there without any news or something like that. So I think we're good, but that's why we always have kind of an emergency stop loss down here. If something crazy happened to this market, it's not likely because you don't have news on this pair. You don't have, I mean, it's the end of the trading day, so I think we're in a good situation. But I also respect the market. I know that it can do anything it wants, and so that's why I have to have that there just in case. But yeah, this is so far so good. I mean, we'll let it do its thing. Let me actually put some extra orders in here while we go talk about some other trades. Let me drop to a 5-minute chart again. So the areas where I'm interested in buying more, like definitely would be, yeah, I think I'd snag a couple more trades right in this area, right there. And then definitely right in here, I'd snag a couple other trades. That'll be good. So we're going to basically buy this dip into this demand and then hopefully get the move that we're looking for by the end of the hour. If not, it's fine. We can swing this trade a little longer. Okay, awesome. So I'm going to let that sit and kind of bake a little bit. Oh, let me grab that on my other account too. 1 second. I'm just managing multiple at the same time. I'm going to add some buy limits in here. Had a really good trading night so far. Been very happy to see some profits come in. And I'm excited to share a lot of that stuff with you guys in just a moment. Okay, perfect. That should be good. Okay, I got them in now. Should be good. All right, guys. So we had an awesome trade, right? I posted on Telegram. I posted on Telegram this trade last night on the Euro Aussie, right, to short. I used the little tool from TradingView to draw out the stop loss and the take profit. I noticed afterwards that it wasn't abundantly clear, like in the description itself, like what I was doing. Like, was I shorting or was I buying? I was hoping that and I'll try to be more specific in the actual words in the future, but in here, like everything you need to see is right here, right? You can see I've got a market order to sell right there at the current price. Stop losses above here, above the previous pivot, and then I've got my target in this next demand area right here. And it actually shows you what prices those are. Like you can see right here, it says 1.55897 as my stop loss. And then my target's 1.55071, and then just enter at market, just that current price. But I also understand that that may not be super clear sometimes. And so, especially if you're new to the market and what we're doing. So I'll try to get something in the description as well, but it was kind of late and I just thought, well, I want to make sure you guys can still take this if it's something you want to take. But yeah, glad to hear that, Sam. Yeah, it was a good trade, wasn't it? And then this is the aftermath, right? So there's the trade we took. I woke up this morning and boom, there it is. There was the profit right there. So, can't complain when you're making money, right? So great little trade there overnight. And I'll talk about some of the reasons why I took this trade in the first place. But yeah, I was pretty happy with this. So all right, so let's talk more about this. Let's jump over to here. Or actually, let's jump to TradingView. Oh, actually, let's actually go over the details on TradingView, like why I took this trade, just to help you guys look for these opportunities on your own in the future. So I was on an hourly time frame, and I did a couple of things. So I'm going to delete this right here. On the hourly time frame, so the higher up time frame, right? We made a peak up here. The market started coming down. We made a head and shoulders pattern, so obviously bearish. And then every time this market came up and made a new high, it made a lower high. This one made just a little bit of a higher high than this one, but it's still lower than these highs back here. And then each time it makes a low, it makes a lower low. And so we were doing that same thing again right here. But specifically, here's what led me onto this trade. And that gave me the hint, like, oh, we're going to make money tonight right away on this trade. Here's what, like, so obviously that's like the pre-context. You're looking at the overall direction. Are we getting lower lows? Are we getting lower highs? Are we seeing these big wicks on the top? Okay. Yep, we're seeing those. And then right here, specifically, if you zoom into kind of like a 15-minute chart, this market was up here at, somewhere around here last night when I took this trade, and the market was coming right into a supply area, right? Why is that supply? Because it is the last thing that was created. It was the last consolidation that was created before a break of structure, right? So the market just kind of busted through this zone. It busted through this support, and this support. Like it just absolutely got decimated. All these different respected support levels, you can see it right here too. This whole thing just got busted through, and the last thing to show up was basically this right here. So I knew that we were in a supply area. based off of that. And so basically I put my stops above the most recent pivot, and then I just rode it the rest of the way down. And that it didn't take very long. I think the trade probably lasted 4 or 5, maybe 6 hours, and we hit our target on this trade. And that's precisely where these 416 pips came from today, was from that trade, which is super awesome. And basically all I did was just I just stacked several trades. I like to do that sometimes. There's not necessarily a rhyme or reason for it. Um, there's not necessarily like a rhyme or reason for it, because I just on this other account, I like to take multiple trades. It's just fun to have more pips showing up in your bucket rather than just one single big trade. The only other reason why I take a lot of smaller trades is so that I have the option to close out at different prices. So, that's the other reason why I do that. But this was a fantastic trade last night. And then let me show you the one last thing that I found that led me onto this trade. So if you guys go to the hourly chart again, I've told you guys to either not download this, but to use this or put it in your trading arsenal, just because it is useful. There's a cool indicator on TradingView that is only on TradingView, I believe. It's the SonarLab order blocks. You can click on that, and it's going to show you where all the different order blocks are. And then you can make it, you can hide it, make it visible, hide it, make it visible. It's super nice. So what I do is I go and do my own analysis first. I use my own brain, I use my own technique, my own skills, and I go in here and try to find these things beforehand. And then what happens is if I find what I'm looking for, I will then have SonarLab tell me if like confirm my work. And sure enough, like as I was coming in here, there were tons of bear blocks that they found. And the way their indicator works is they just do the banker's candle. So they're looking for the last candle up before a major move down, or before a major move up, they'll look for the last candle down type of thing. That's how their indicator works. And sure enough, there were several. This one didn't actually exist last night, this last bear block. I wish I could delete that one, but basically where I drew my supply zone was a bearish indication. There was also a lot of bearish activity up here too. So I knew the banks wanted to send this down last night, because not only did my analysis find a sell signal, but there were lots of other bankers candles in here too, suggesting that the market was going to go even lower. So that was awesome. That was really, really nice. And then how did I know to get out where we got out? It all comes down to looking for the next supply demand zone. I talk about gas stations, right? You're on a big road trip across country. The market doesn't stop on the freeway. Okay. The market stops at the next gas station, stops there. And sometimes it changes its mind and says, you know what, I'm done with this road trip, I'm going to go the other way. But then it goes back on the freeway to the next gas station. Or then maybe it decides, you know what, we're going to finish this trip. We're going to go all the way to New York and back or whatever. And boom, we're going to finish, and we have all these different stops along the way, but we're not going to stop on the freeway, right? That's kind of what the market does. And so when I was looking for a target last night, I was like, okay, well, where are we going to close this trade? Where are we going to take our profits? And so if you look at a 15-minute chart, this is where the market was last night. It was up in here in this purple area, pink area. I'm not sure what color that is. And then, we sold up here. And where's the next zone? Well, this is the freeway. This big, long green candle, this big, long, this area right here is the freeway. You don't want to take your profits on there. If you take your profits on there, you're closing too early, because there's more money you can make on these trades, right? So, and the same thing, this is a freeway right here. You got the freeway going this way, and you got the freeway going this way. Where should you be closing? Well, for me, I said, well, this is the next gas station right here, right? Because this is the last thing, this is the last consolidation. that caused a break of structure, that caused the market to move up in such a large way. And technically also this would be a gas station too. So this would have been not a terrible, in fact, that would have been the better one to close at. It's fine, but you know, that would have been really nice to close right there because you can see it did wick into that right there. But I just wanted to close out at the first site of a gas station, which was this guy. And so, you know, that's why I held my take profit to that point when we took this trade last night. And you can even see that on my analysis. Like if you pull up the Telegram, you can see my target here on the hourly time frame. There's a little thing going on right there. That's why my target's right there. But I would never take my profit in the middle of the freeway, if that makes sense. I hope that's kind of a good analogy, but that's we're riding the market. That's what we're always doing. We're riding it from one place to the next place, one place to the next place. That's what we're doing. So this was a fun trade. I'm really happy with it, and very classic trade setup. And all of this was based on, you know, finding supply and demand and overnight supply and demand. For those of you that work during the daytime and can't take the banker's close trade, you need to learn how to do this, right? Learn how to find setups kind of like this one. I took another one last night that this isn't, ironically, this wasn't even the best trade I took last night. The best trade I took was actually this guy. I didn't want to post it though. It was a little bit more of a risky trade, to be honest, with you guys. It was a riskier trade. But let me nonetheless explain what my analysis here was on the pound CAD. So I took a long position on the pound CAD last night, and this was before the CPI news. So I knew I was being kind of edgy, honestly. So, but I had pretty good take profit, pretty good stop loss and stuff like that. But and I think I was being okay. So basically, if you go to an hourly chart on the pound CAD, and actually this might answer one of the questions here. Joe says, do you have a list of currencies that move at evenings last night? Yes and no. So there's a general answer and then there's another answer. Let me give you both. So when I'm trading at night, for me, see at 8 p.m. Eastern, which is most of you, I think most of you are on the East Coast, but I'm in Mountain Time Zone, which is at 6 p.m. So I know from my 6 p.m. Eastern, 8 p.m., the Tokyo market opens, right? And so if I can, I like to have trade setups associated with the Tokyo market, you know, around 6 p.m. or 8 p.m. Eastern, right? So Tokyo, you know, anything with the yen, I try, you know, Aussie, Kiwi, those are not bad options at night. Now, the thing is, when I go to bed, and when pretty much here, most of us in the United States go to bed, I know I've got some international clients too that are here, but most of us in the United States, when I go to bed at night, the London market's going to open while we're asleep. And what are some really good pairs to trade then? The general answer is, you know, the pound, the euro, the franc, because that's the London market. It's most associated with the London market. But because the London market is such a big deal, because it moves so much currency and the transactions that flow through in London, because it's such a big fat deal, almost any currency pair works. So anything that's not at supply, anything that you believe is going to move to a supply and demand zone is worth trading. So that's the other answer. And so for me, I was just looking for stuff that I think had, you know, something left in the gas tank to move to the next supply demand zone. So that's precisely what happened here with the pound CAD. So last night, the market was in this little consolidation right here. I'll draw it out. This is where it was last night. So this move didn't exist yet, right? And I noticed that on a higher time frame, this is where supply is. It's in these purple boxes. And how do you know it's up there? You have to go back on the left side of the chart to find this. And you actually have to go back pretty far, all the way back to March, actually. And the last time you know, this is a nice consolidation here. Whatever happened here was the last gas station before this freeway right here that pretty much took the market down. So we know that supply, right? That's where that's what the gas station right there. And then you have another one up here. And why did I pick this one? This one's kind of different. It's because it's the last thing before the break of structure, right? It's this guy right here is a major structure zone, structure point. And whatever this is, was the last thing that caused it. And really, if you want to break it down to its most minute detail, it's that whatever this is supply. So the market had been going up a lot here in December and November, but how do you know where the market's going to stop again? Well, it's got to go to the next supply zone. So now if you fast forward to December, now we come to the right side of the chart after having done that analysis. We can come over here and we know that the next supplier gas station is here or here. Okay. So, and we're not there yet, right? We haven't hit it yet. It got pretty close right there, but it never actually hit it. So, and then after I did that, that's not the only thing I did. I somewhat cheated. I guess I used Sonar Lab, and boom, Sonar Lab is saying, we have tons of buy blocks down here. You've got tons of support. We're not done pushing this up. We're going to keep going up from here. And so I said, okay, this pair is not done with its bullish move. There's more to go on this move here. It is not done yet. 100% it's not done yet. So when I saw it at a low price right here on a dip, I said, this is the case where you want to buy a dip. This is one of those situations where buying the dip is a good idea. And not only did I do that, but I think I made like $5 grand on this trade last night. Here's how I did it. So not only did I buy there, but I had a kind of a tighter stop below this range right here. And then what I did was I stacked my buys. I bought there. If it goes up a little higher, I buy again. If it goes up a little higher, I buy again and again and again and again. And so it's also known as like an anti-martingale, where you're adding to only winning trades. Okay, you're adding to your winners only. It's actually kind of genius. But it can be risky, because the risks of doing this type of trading is if you're not certain or pretty confident that the market's going to go up to where you're hoping it's going to go, you can get triggered into these trades, and then the market can turn against you, and then it's a nightmare. So I'm just letting you know the risks of doing something like that. So I only employ that type of technique when I'm really confident about a direction. And so I was confident that this was going to go up. And then I also knew that, if it gets up into this area, back to where this is, I'm probably going to clock out of the trade. So I already clocked out of the trade. I got the move I was hoping for on this right here. But that's it in a nutshell, is you're identifying, and the technique doesn't matter as much. I'm just trying to teach you guys what to be looking for. So when you're trading something like this and you pull up Sonar Lab, okay, you can see there's tons of help down here. We're not done. But then on top of that, you go into your own analysis to find out, okay, where's this thing going to stop? Well, that's where supply is. In fact, you can actually see, if you go to a 3-hour chart or a 4-hour time frame and pull up Sonar Lab. No, let's do I think it's on a 4-hour. Here it is. Okay, watch this. Boom. Right where my blocks are, they're saying there's blocks. Look at that. Literally where I'm saying to sell, where I'm saying supply is, Sonar Lab saying supply is there too. So you've got something when you've got that correlation of setup. So I really liked this. I almost get chills when I think about it, because it's like super exciting to me, because you've done when you go through that process and you kind of toil looking for an opportunity, and you see this imbalance right here, and how we're not at that imbalance yet, the opportunity, you're like, whoa, I got a good opportunity here. The only reason I did not send this one to you guys is because there was a CPI news, and that was my only concern. But I thought, and the reason why I employed this technique was because I thought, well, if the news goes down, if the market sends this lower, um, if the market goes lower, I'm just going to stop out of a couple of trades for a loss. Okay, that's fine, whatever. But if this market goes higher, I should be able to trigger into basically all of these and make my money on the other end. So let me go ahead and delete all this stuff now. It looks like our trades, hey, 1 second, guys, before I delete this, boom, here we go. Let's see, we've got this euro, we've got the euro pound moving in our favor now. Let's see let's take a closer look at this. Yeah, I'm not quite ready to close yet because where's the next gas station? Where's the next stopping point? It really isn't until kind of up in this area. I might close a few extra trades there just because I do want to be out and successful today. But yeah, if we round up closer to here, I definitely want to start taking some more profits on this. But the only thing I'm going to do, because I did add a couple of trades, I'm just going to lighten the position just slightly. Just take a few of those off and then leave the rest to ride. And I'm going to do the same thing on my other account and lighten the position and let the rest to ride. Okay, this is good. We're doing great stuff, guys. We're doing great stuff. And I saw another question here. Let me just answer this real quick for those that are wondering. What are the 3 different pairs that I trade with the banker's close? I trade, in fact, I'll put it in the chat box. It's the euro franc, euro pound, and the pound franc. And let me also do this. I have this really cool thing that I made. Not really cool. I think it's cool. Yeah, I'm going to own it. It's cool. It's just a little PDF that I made on the London Banker's Close, which I also am nicknaming. We're going to call this the retirement trade. Why is it going to be the retirement trade? Well, it's because, guys, what a perfect trade opportunity that's once a day, every single day, that like if you're home, you can get up casually, get your coffee or whatever, and still trade this um, um, just for an hour of your time, and you can make a side income or a full-time income with. So that's why I'm calling it the retirement trade as well. But yeah, let me give this to you guys. I'm going to download this as a PDF here. These are all the rules for the banker's close trade. So I'm going to go ahead and download this. I'm going to put this in the chat box for those that are watching. For those of you that are watching the recording, you're going to have to either join the program or email me to get a copy of this. If you guys want to be able to come, for those of you that are watching this in the recording, if you want to watch this live in the future so that you can capture and take this awesome trade right here that we're now up 45 pips on, and take the other trades like this one that we're up 420 pips on from last night, click the link below, start your free trial. We do a 14-day free trial if you guys want to come to this. So super awesome opportunity. But yeah, let me put this in the chat box for those that want this. Here is, let's see, let me go ahead and put this in here. Here it is, London Banker's Close strategy rules. Okay, let me know if you guys could download it. I just put a PDF in the chat box there with the strategy rules. Okay, I should probably be a little more responsible and close out a few of these trades. I don't know. I'm just thinking that I do think there's a little bit more to go on this. So I'm going to be patient. And I think that is responsible, by the way, to be a little bit more patient, because I do think there's a little bit more to go on this trade. So I'm going to be a little bit more patient, even though I wish, yeah, I think there's a little more to go. So be a little patient with that. It may come back down and then go back up, but we're going to have to just be patient. All right, guys. So yeah, yep. So those are the rules. The only thing that I want to add that I haven't really added is, guys, if you can try to do all of this, follow all these rules here with the strategy, and if you guys can add the order blocks as part of your system, yeah, your systematic way of entry, and use the order blocks, you're going to just trade so much better. You're going to make much, much better trades. So, and that's exactly what we did today. When we're trading this euro pound, we drew out these order blocks before we jumped into here, and that's why we felt comfortable. This is one of those situations where buying the dip makes sense. You have to be careful with trading. Like with buying the dip, I know a lot of financial advisors out there always tell you to buy the dip, and that's a little different when you're buying things like stocks over the long term that you have a 10, 20, 30-year time horizon on those types of things. Like, I guess buying the dip is not one of those like bad things to do. In fact, it's probably a good thing when your time horizon's so far out there. But when your time horizon is like an hour, a couple hours, and you're just creating income, buying the dip isn't always a good idea, right? It's not trading is not one of those things where buying the dip is always a great thing to do. However, there are times when buying the dip does make sense. So for example, I feel comfortable buying the dip with this trade because, hey, we're at the end of the trading day. We don't have any news on this pair. We're coming into some buy order blocks. We should get some help with this market. It's one of those situations where I feel a little more comfortable. So, all right, we'll let this do its thing. It's being a little stubborn, and that's something to remember on a day like today. Even though there's not any news on this pair, it's probably not going to be as willing to give us a big move in either direction. So I guess when the profits come, we should probably take those. Yeah, I'll probably do that. The next time we get a nice move to the upside here, I'll probably take off quite a few more trades. Awesome, awesome. But good day so far. Like everything's been swimming, like really good stuff. And just as a reminder, after we get out of this trade today, I'm very content with our profits that we've made today. I probably won't trade again until tonight, and I probably will wait for all of this news to pass by. So just as a reminder, you've got GDP on the Kiwi, unemployment on the Aussie, FOMC meeting with the dollar, and Fed funds rate. Like the list is pretty big. And so this isn't over until tonight. And then tomorrow, um, similar thing, right? I think it's funny how everyone chooses to like America. I'm not trying to say America's better necessarily for those of you that live outside the country, but I think it's funny how people outside of our country just follow what we do. Like we say, okay, we're going to raise rates today, and then the pound, the euro, the franc, they all choose to schedule their rate statements like a day or two after we raise our rates. I just think it's kind of hilarious. Like they don't want to like stick their head out there, put their thumb on something until we decide what we're going to do. They're like, okay, we're going to wait for America to figure out what they're going to do first, and then we're going to decide what we do next. I just think it's kind of funny. So yeah, you do have a rate statement with the franc tomorrow. You've got a rate statement with the pound tomorrow. The euros, let's see, the euro does not have a rate statement tomorrow. You've just got some other major news with the euro and the dollar. Um, and the other reason why we have a lot of news right now is because you got to get it in before Christmas and the holidays. So um, I think that's the other thing that's going on. So that's something to be aware of. When we trade the bankers close tomorrow, depending on how things are looking, we may stay clear of the franc. Even the pound and even the euro. Like it could be a rough day with the bankers close. Um, the way I'll determine which pairs will trade tomorrow will be based on how they reacted during these news events, because all of these news events will have already happened by the time we get to the banker's close, and they'll have 3 or 4 hours since that time since it happened. So yeah, I'll give the market some space to do what it needs to do. And then we'll come in after the fact. And if for example, let me give you an example here. Let's say the pound moves in a 200 pips one way and 100 pips the other way. I might be a little more concerned about doing a banker's close on the pound, but maybe the euro doesn't move a ton, right? Um, if the euro doesn't have a big move, then I'll probably just we might go with that guy instead. And technically, you can trade the banker's close on any pair out there. It is just better to trade the euro, the franc, or the pound, right? If you can. So, but yeah, there's essentially news for the rest of this week, guys. And that's fine. We'll just have to navigate how we trade through it. That's all. And then going into next week, they are doing their rate statement on the yen. CAD has a inflation report on Wednesday, nothing on Tuesday next week, and then some GDP with the CAD on Friday, and then everything stops. Everything stops, right? And just for a reminder for those of you that are new to trading, the week between Sunday, Christmas, and New Year's, that week is a terrible trading. It's probably the worst week to trade in the market. I'm just letting you know now. Like, if I were you and I was new to trading, go try it. Like, throw some trades out there just for fun on a demo account. On a demo account, go out there and just throw some trades for fun. I want you to experience the spreads. Like, I want you to experience what it's like to have a market that's like, okay, we're not doing anything. So whatever the market needs to do before the end of the year, it will do between now and the end of next week. But then that week between Christmas and New Year's, it's going to do nothing, right? And then you shouldn't see volatility pick up until well, you can see it on January 2nd, but well, no, you won't because they're observing the bank holiday is observed on that Monday after. So you won't see volatility pick up again until Tuesday on January 3rd. So in fact, we'll probably cancel the banker's close for this Monday the 2nd, and Monday the 26th, we're going to cancel the banker's close. We're just going to take the day off for trading. I might get on to trade on Tuesday, maybe Wednesday, but don't be disappointed if instead of getting 10 or 20 pips on the banker's close, we only get 5 pips, right? That's if we get 5 pips on Wednesday the 28th or Thursday the 29th, I'm going to be very happy. So I still might trade those days. I'm just letting you guys know. And who knows? I might just decide to just just hey, let's just take a break for a week, guys. I don't know yet. Maybe we'll do something shorter, but and maybe we'll do a lot more instruction this week instead of live trading, just because the market's not going to give it. I'm just letting you know in advance, right? I'll think about it. I'll think about what we want to do that way. But for now, everything's still exciting. Oh, here we go. Let's check this out. Starting to move back up again. Everything's still exciting right now because we've got a lot of news. We still have volatility, a lot of good things happening. It's good times, right? All right, I'm going to just on my other account, just peel off just a couple of trades because just for $20 each or something like that, and let the other ones run. On this next impulse, if we get another impulse to the upside, I'm going to close a couple more trades for profit. we can get one more candle to the upside here, probably take some more profits off the table. And I see a few of you have DM me or texted me in the webinar with some questions. I'll send those to you too. I'll send those. I'll message those after the webinar. Joe says, rumor has it the world follows the US dollar. Yeah, definitely. Yeah. Yeah, whatever we do, everyone kind of falls suit. I don't know if it'll be that way forever, but for now and for the last since World War II, everyone's basically followed suit with what the dollar does. Yeah, I mean, if you think about it, if you're from like New Zealand or something like that, and you're running the Central Bank of New Zealand, and you decide to increase rates just as the US dollar is about to decrease rates or something like that, and you're not following what they're doing, like your currency and your currency pair is going to look really silly. It's going to look really silly against the US dollar because and other currencies because you're not following what they're doing. All right, guys, let's see. It's being slow, and that's to be expected at this time of the day, and because we have that news coming out later. But I do want to see if I can get one last impulse before we close this trade out completely. It's being slow, but that's okay. That is just fine. I'd rather have it be slow than have it do something unexpected. Let's see, if it wants to make another low, that's fine. But if it makes another low, there's some really good buying opportunities. Specifically, I'm looking at this right here, because this consolidation right here was the last real main impulse, or this is the last consolidation before this major move to the upside. And so we should find some demand right there. And so that's why I'm thinking, yeah, if it does come into here, I'll probably pick up some more orders. And from a traditional sense, this is now technically a banker's close trade because we are hitting that lower Bollinger Band. And we are hitting a kind of a demand zone. So I would say this is pretty textbook right here. So this is good. That doesn't mean it can't go down more. I'm just saying that it is a textbook entry at this point. You know, you're in that hour of the day. London closes in 5 minutes. we're good. And a lot of people have asked me this question. So should we be out of the trade before the London market closes? No. In fact, most of the time, sometimes we're lucky and we get to close out before the London market actually is done. But a lot of the times you and I will take trades that, we'll take trades like this right now, and we're going to hold them for an hour or two, sometimes longer, even past the actual close. And that's okay. We're just trying to find the liquidity at the end of the trading day that's likely to set kind of like, here's what happens a lot. So if the market comes into demand at the London close like it has here, what typically ends up happening on a normal day is the market will kind of now just drift away from that demand like this for the rest of the trading day. And so now that we're at a good spot, with the market closing in 5 minutes, we're in a good area. That we should be able to get what we want before the end of the day. I will do everything I can. In fact, I think we should. Today is not necessarily the most normal day out there, but we really should be out of this trade in the next 2 hours. So definitely keep your eye out on Telegram if I'm not out of this trade, because I should be posting in the next couple of hours that we're out. If I leave some trades on, I'm probably going to move my stop losses up anyway. So yeah, so no matter what, I'm going to text you on Telegram what I'm doing. Like I might say, oh, hey, I've closed out of everything, which is probably the most likely thing. But if I keep some trades on, I'll probably move the stop loss up just so that we're a little more conservative with FOMC coming. And I'll probably move the targets even further down so it has an easier target to get to. That's probably what I would do if I left this on for the next little bit. And I also got your direct message, Novobi. I'm gonna, yeah, we can chat definitely. If you've got some time, we can chat for sure. Probably just on Telegram. I think I've chatted with you a couple times on Telegram, if that works. All right. Well, let's see here. So we've got a little bit of a move up here. Let's see if that holds. Again, if I added a couple of trades in here, so if we get a move back up to here, I'll probably close out of all of these up here and leave these trades to ride a little bit. I'm going to wait just a minute or two longer because I really do. It's really fun if we can close out of these trades at the end of the trading day. It is really nice. I'm actually curious. Did that pierce that low? No, I think it kind of held. Let's see. Did it hold this? Yeah, it did. Okay, well, that's a good sign that it held that low. Let's see here. We're close. We're close back to this line here. Come on, market. Let's see it. Let's see it. Let's see it. Let's go. Okay, I'm gonna have these orders ready to go because I'm probably gonna clock out of a lot of these ones that are priced lower. Yeah, I'm gonna close out of some of these that aren't priced as well, and I'm gonna leave those. So I feel like with this type of trading, you have to take advantage when the opportunity is given. And so like when the opportunity to buy lower is available, you need to learn how to buy lower. And when the opportunity to clock out of some trades when the market goes in your favor a little bit, I feel like that's also required too. Like you have to be able to do both, go both ways with it. But so far so good. Like I'm up, if you guys see here, I've got 300, basically $300 here on this other account that I'm positive, and that's just from the banker's close. And I've already closed out of a couple of trades for profits on that pair. So we'll see how far that goes. And then obviously this one is up, but I am looking for, let me just bring these in. I know I'm going a little overtime, but I am going to bring these in a little bit. Obviously, if we can get closer to, this area, we want to take our profits and get out of this trade and be done right in here. Yep, I'm trading my FTMO account. Yep, that's on my other. This one was with this is another prop trading company, Alveo. And that's what you guys see me often trade on over here. So, all right, guys, I think I'm going to wrap up with that. You'll get an update from me in Telegram in the next little bit. So, be aware of that. But another awesome day, so good. A lot of highlight of the day so far has been the overnight trading. Really, really good overnight trades. So, all right, guys, take it easy with FOMC, and we have COT report tonight. So if you guys want to come to that for an evening, like learning how to do swing trades, more of these types of swing trades, more evening trading. If that's something you're interested in, make sure you come to COT report tonight. So, all right, guys, thanks for coming. We'll see you guys later.